This week, we're talking livestock slaughter and cattle on feed numbers. Hello, I'm Meghan Grebner. Welcome to the weekly livestock market update on Brownfield. With us, as always, to talk all things markets, livestock economist Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Welcome to your swan song on this Friday afternoon.
It's the final one. I'll see if I can keep it together this afternoon.
I have no doubt that you will. We will get to those two reports coming up. We will meet our three new economists who will be joining us after the first of the year. But first, let's recap what happened this week in the markets.
Yeah, on the cattle side this week, live-fed cattle are about 65 cents higher this week, Megan. Those feeder cattle markets were stronger this week. They were $3 to $8 higher this week. On the future side, the February live cattle futures contract closed down $3.70, and the January feeder contract was down $2 this week. On the choice box beef price this week, we were up $3.15. That now puts it nearly $27 above where it was last year at this time. On the hog side, cash barrows and gilts were 30 cents higher this week. The February lean hog futures contract was up 35 cents. And we also gained $2.65 on the pork cutout value. That was really driven by what was much stronger bellies this week.
We definitely have continued to see those stronger prices and a push higher on both the cattle and in some cases, in some instances, the hog side of things as well. How much are we kind of thinking about this in terms of demand, but also that whole supply situation that we have continued to talk about?
Yeah, so I think we're seeing demand that continues to look very strong. I start on the cattle side by, we spent much of the, at least early fall, talking about where choice box beef prices were headed. And the fact that, we're sitting at what was nearly $3.17 a pound this week reminds me to say, looks like that wholesale demand has been very strong. Even on the pork side, the pork cutout value running $13.60 above where it was this time a year ago. To me, demand looks good from what we see out of the price side of the equation.
Weekly slaughter numbers, we're heading into a holiday shortened couple of weeks. Talk to me a little bit about those numbers and how those were stacking up.
Yeah, so USDA tells us for the week ending December 21st, a run of 617,000 head of cattle this week. That's up 8,000 head from where we were last week, but down 4,000 head relative to a year ago. And on the hog side, a run this week of 2.581 million head of hogs this week, 21,000 head more than we ran last week, and up 152,000 from what we ran a year ago.
And as we take a look at those numbers year over year for cattle and hog slaughter, how are those running?
Yeah, so we're down 3.6% on cattle slaughter year to date and up 0.8% on hog slaughter.
Any big surprises as we head into the end of the year as you look at these numbers? Is this kind of pretty much what you would have expected when we started talking at the beginning of the year about these?
So I think, Megan, perhaps the biggest one is, cattle slaughter not down more. When we started the year, we would have expected beef production to be down harder. So I think if there's any surprise, it's there. On the hog side, I think this is pretty much in line with what we would have said back in January of 2024.
All right. We don't talk eggs and poultry a ton, but we do when it matters. One of the questions I've been getting from the consumer side of things is what's going on with egg prices. We've seen this uptick of high path avian influenza move in throughout those flyways and in those areas. Talk to me a little bit about how that's impacting, one, the supply side when it comes to layers, but two, the consumer side of things when we think about prices that we're seeing at the grocery store.
Yeah, so we've certainly seen an uptick of late. I think we could start in California with just the outbreaks that we've seen there. So about 4.5 million head of layers that have tested positive for high path AI certainly put a dent in supplies in California. So California has been a large table egg layer state for a long time. I think recently you can add places like Iowa to the mix as well. So we're seeing more cases I hear a lot more of just even wild birds around a number of states that are probably showing signs of high path AI. So supplies are certainly tightening. I think when you look at the price side of the equation, USDA is going to tell us of the latest data they have, we would have seen what I would call wholesale prices touch past $4 a dozen for large graded eggs. That's the highest price that we've seen in 2024. Um, I'll remind us that we started January of this year at about $1. So just to understand the difference that we've seen as we move through the year, it has gone stronger. I think we'll continue to tighten, just given some of the latest supply side high path AI cases that we've seen.
And definitely not the best time of year for egg prices to go up when you think about all the holiday baking that's happening right now.
That's right. I would just tell consumers that they should probably expect higher prices as they look ahead for the next several weeks. Of course, trying to figure out exactly the spread of high path AI has always been difficult for us the past few years. I expect 2024 and into 2025 will be no different. It just seems like we have a lot more cases showing up here of the last few weeks again.
All right, Scott. Livestock slaughter numbers out this week. We have been talking, and we look at these every month. Specifically, we take a deep dive into the beef cow slaughter numbers, and we'll get there. But first, let's talk about beef and pork production for November.
Yeah, so November beef production tallied 2.2 billion pounds. Meghan, that's actually down 2.7% relative to where we were in November of 2023. Cattle slaughter in November was down 5.9%, while dressed weight's still higher. 868 pounds was cattle dressed weights for November. That's 3.3% above where it was a year ago. So we're starting to, I think, in some ways catch up with what had been higher dressed weights that we've seen for a number of months now. On the pork side, 2.3 billion pounds of pork produced in November. Well, that's down 2.2% relative to what we saw November of 2023. Hog slaughter down 2.6% is much of the reason for lower pork production. Hog dressed weights were basically unchanged at 215 pounds in November of this year, same as it was November of 2023.
All right, November beef cow slaughter. As you take a look at that number, I think there's two stories here, right? There's a number that's actually that we see, and then it's when we dig deeper and see what actually is coming out of that data.
For sure. And I think when we look at the November beef cow slaughter numbers, so 236,000 head, that was down nearly 31% relative to November of 2023. Reminds me to say, I think we've been seeing beef cow slaughter continuing to move lower relative to year ago levels as we've gone here the past couple of months. Maybe that's some indication that we're talking about building. When you look at year-to-date numbers, down 585,000 head year-to-date, or 18%. I think that's, again, indicative of just what's been happening of late. Now, I often look at what's beef cow slaughter relative to beginning inventory. And when you look at 2024, year-to-date, we're talking about roughly 9.2% of beginning beef cow inventory that beef cow slaughter makes up for the first 11 months. We're getting a lot closer to perhaps talking about that's enough to at least stop the reduction. We would have been a little below 8% back in 2015, just for a point of comparison for a period of time that we grew fairly quickly in terms of beef cow inventory.
I think as we take a look at these numbers, and we'll talk cattle on feed here momentarily, but really ultimately kind of highlights the need for that January cattle inventory report that'll come out to kind of give us a better gauge of where we were, since we haven't had that data for almost a year.
Yes. Yes, it'll be very good to get a cattle report. Let's hope that we can see that cattle report here, given some discussion about a government shutdown that's in front of us as we sit here and talk this afternoon.
All right. As we mentioned at the beginning of the program this week, this is Scott Brown's swan song. He is taking a new career path and shifting gears a little bit, and it gives us an opportunity to look at the weekly livestock market update and to grow it. And we're excited to the future. And beginning in 2025, Kenny Burdine with the University of Kentucky, Charlie Martinez with the University of Tennessee, and Josh Maples with Mississippi State University. You guys are all on cue. This is a great sign for what's to come in 2025. Will be joining us in the new year. Gentlemen, thank you very much.
Thank you.
Thank you, Megan.
Thanks, Megan.
All right. I will let you introduce yourselves a little bit later, but let's get into the meat of this cattle on feed report. As we take a look at information and the November data, what are some of the things that stood out for you, or what are your takeaways from this month's report?
I'll jump in first, Megan. I mean, I guess one of my big takeaways is, this report is pretty well anticipated. Looking at what came out ahead of the report from market expectations, everything pretty close to in line with that. I don't think it's going to be a big market mover. Always look at the placement number, and placements down about 4% overall. So that was kind of a big one that jumped out to me. And then looking at some of the regional data was pretty interesting about where those declines were, with most of it happening in Texas and then also Colorado.
I would echo the same thing as I went through it. Certainly I looked at placements. It is, I think, worth mentioning that we are now running just a tick below a year ago on total on feed numbers. Not a great deal, 0.3%. And so I guess it still rounds to 100% of, but we inverted just a bit. And I think a lot of people have been expecting for a long time for us to see those, on feed numbers, dip below a year ago. And they've been holding above, I think, somewhat due to longer feeding periods and heavier weights. And I think somewhat due to imports. So that stands out. And then, of course, for the placement number I was interested in, the ban on imports from Mexico came late in the month. It impacted one week of placements in November, and that was a holiday week. So I think there may be just a tick of impact there, but I think it'll be the next month when we see December placements that we'll see more of an impact from that, is kind of my guess going forward.
Charlie?
Yeah, so it's hard to follow Josh and Kenny whenever they start hitting all the hot spots of the report. But I think what Kenny was mentioning there at the end is something that will be something to watch when it comes to the screw worm, because today the American Veterinarian Associations may start making announcements about screw worm and kind of having some notices about it. And so to me, that's a signal of not only notoriety or kind of awareness being put out about it, but also to me, it's starting to make impact across that southern border and that southern region. So as we start getting to the cattle numbers, December is going to be interesting. And then Scott mentioned it, kind of overlaying that with a possible shutdown or government shutdown lingering, and hope it doesn't happen. That would really not be fun to finally get a report and then not be able to have a chance to get it because of a government shutdown. So kind of just something building more anticipation, I guess, more for the beginning of the year than anything.
So you bring up the shutdown, which is one of the questions that I was going to throw at you guys at the end of the day anyway, and we can go ahead and talk a little bit about it now. We know that they're voting, or reportedly voting, between 5 and 5:30 Eastern. So we're taping late in the day, late in the afternoon on Friday afternoon. We won't have the results of that as it happens. So if we get to a shutdown, 2018, 2019, right, is the last time where we had that prolonged government shutdown, and we saw cattle inventory numbers, get delayed, pushed later. How does that impact because it's been so long since we've had that data, what you guys are looking for and what producers should think about in terms of cattle inventory and what's happening.
We're flying blind to some extent, this year more than we have because we didn't have the July report, right? I think that's important to point out is that, we haven't had an estimate of cow numbers since July, or sorry, since January of 2024. So I think that exacerbates it some. We're certainly trying to watch heifers on feed as an indicator. Scott was talking about cow slaughter. All those things are pieces of the puzzle. But I think all of us kind of recalibrate when that January 1 inventory number comes out. So, the thoughts of waiting on that any longer it is something I would be concerned about by all means.
And Megan, I'll just throw in there, when these reports come out in January, you're not only interested in what the January 1, 2025 number is, but there's typically revisions for last year's numbers too. And last couple of years, there's been some pretty decent revisions to the previous year's numbers that have actually impacted what we thought about going on in the current year. So to me, that's one of the big things, January 1. I look at the January 1, 2025 number, then I immediately go look and see if the January 1, 2024 number has changed. And so waiting on that is a big deal, especially where we are or think we might be in this cattle cycle.
Charlie?
Couldn't say it. I can't. There's nothing really much more to add to it. I mean, they really hit the 2 points that kind of drive home why that report's important, and kind of the unknownness is somewhat, it would be unfortunate to put it lightly.
Well,
So
there will be, go ahead.
I was going to say, Megan, that if we look at what USDA is already saying, that they should be surveying or nearly starting surveying already for this January 1 report. So if we shut down, of course, we don't know that when we're taping here, but if we shut down, maybe as important as how long is that shutdown going to last, it would give us some indication of whether the January 1 report has to be delayed. I think USDA said, we have the funding to do it. That's not the issue. It's just whether we have folks able to work to make that happen. So it won't take, very far into the first of the year before I think we would see them probably likely delay that report to a little later than the normal release.
Which would put us into early February at the earliest, right?
Yes, and I assume, we'll see USDA if we shut down and stay shut down for a period of time. I think USDA will try to let folks know release of those reports or the change in the release of those report dates fairly quickly once we would get out of that shutdown situation.
Gentlemen, thank you very much for your time. I'll give you just a couple of minutes if you could introduce yourselves as well and a little bit about your background so folks can get to know you and know that there's a rotation. We'll have a rotation every 3 weeks. So you'll see Charlie first, and then is it Kenny and then Josh? Is that the rotation I think that we worked out? But you'll see them once a month just about. So Kenny, do you want to start?
Be glad to. So, hello, I'm Kenny Burdon. I'm Extension Livestock Economist at the University of Kentucky. I actually grew up in Central Kentucky. I grew up on a, beef cattle tobacco farm, and that was kind of where I spent my formative years in a tobacco crop. So, I've been at UK. I will start my 26th year in, I guess, February of 2025, and I've been on faculty since 2012. So, program is, focused on livestock marketing, outlook, price risk management, and some management stuff as well.
Thank you for joining us. Josh?
Yeah, thanks, Megan. Similar to Kenny, I'm livestock extension economist here at Mississippi State University, associate professor here in the Ag Econ department. I also grew up on a beef cattle farm in North Alabama, registered Angus operation there that my folks still run. And it's a cattle, poultry, hay, kind of, all the above operation. Been here at Mississippi State, about to start my 9th year. My program primarily focuses on, similar to Kenny, I do a lot of beef cattle market analysis, price risk management, those kinds of things. So thanks for having me on.
Thanks for joining us. And last but not least, Charlie.
So I'm Charlie Martinez. I'm a assistant professor in the Ag and Resource Economics Department at the University of Tennessee, and I'm also the Farm and Financial Management State Specialist. And then another hat that I wear is the director of the UT Center of Farm Management. I grew up in North Texas, more centered around seed stock cattle and the Simmental Association. And then throughout my education and experiences, I've spent time with the Cargill cattle feeders and Real Beef Feed Yard in Raymondville, Texas. And then to this day, still involved in the cattle industry from the seed stock side still with my wife and her family in South Texas in the Valley. And I'm excited to see what we can do. Scott slayed a heck of a program. And I used to listen to it as a listener. Now I get the chance to have more of a say in it, and look forward to having this opportunity.
We are so excited to have all three of you join us and to take part in the weekly livestock market update on Brownfield. Scott Brown, final words. We have Hogs and Pigs. Quarterly Hogs and Pigs report comes out on Monday. Cold storage is also out next week. What are some of the things you're watching?
Well, I think in terms of hogs and pigs, it's a lot more just, do we get a little bit of expansion in breeding inventory in this report? That's probably my thought right now, but it'll be very modest expansion. So I think more of the same in terms of a lot of the conversation about a lot of sideways in terms of production for the pork industry in 2025. Cold storage, of course. Again, I continue to say it's only one piece of the puzzle, but I assume cold storage stocks will stay relatively at low levels relative to historical numbers that we have, and that will continue to say demand looks fairly good across the country.
Scott, it has been a wonderful almost 9 years, and we wish you well, and thank you for spending your time with Brownfield and our viewers and listeners every week.
Yeah, so thanks to Brownfield, thanks to Meghan, thank you as well. It's been a heck of a ride, and I think it's certainly helped me grow in terms of following ag markets. So I appreciate everything that's been done, and I'm awful happy to see these three gentlemen that are going to continue doing the weekly livestock update as we move ahead.
All right. We will see you all in 2025. This is the last episode of this year. To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a very Merry Christmas and a Happy New Year. I'm Meghan Grebner for Brownfield.